Do you, as a US expat, have to file state taxes while you're abroad? Let's find out. I'm Nathalie Goldstein, CEO of MyExpatTaxes, the leading tax software for US expats around the world. So, as a US expat living abroad, you probably have to file your federal taxes every single year of your earning income, but do you have to file a state tax return as well? It depends. I know, with almost all questions, the answer is always, it depends, because it really does. Did you live in that state at any point in the year? If yes, you probably need a state return. Did you have any type of state source income? So, did you work out of the state even if you're not living there? Did you have a business trip there? Did you have some type of rental income there? If yes, you probably need a state return. Or are you domiciled in that state? And we'll get into that later in this video, but are you considered still a resident of that state even though you're only living abroad for, 1 month, 6 months, 1 year, and you intend to return to that state? If so, you probably need a state return. And not all states have income taxes, right? There are some states out there, the majority do, don't get me wrong, the majority have their income taxes, but there's a handful that don't have state income taxes. Washington, Nevada, Florida, sounds like pretty chill states, right? But anyways, these are states that they do not impose personal income tax, and so you're not required at all to file a state tax return there. There can be other exceptions based on investment income, etc., but generally no state income taxes are required. And so how do states actually determine if you are a resident of that state and you have to file state taxes? So residency in a state is not black and white. There's actually a lot of different conditions that determine if you have residency. And that normally goes along the lines of, are you living in the state for more than 183 days? Are you having property in that state? Do you have a house there? Do you still have a driver's license there? Do you still, have a bank there? Do you have all of your family connections there, right? It's, like I said, it's not black and white because it goes from hard facts of owning property to, are you still going to your local dentist there? And it really comes down to, if you're moving abroad as an expat, do you determine that your move is basically permanent? That if you're moving to the UK, are you intending to live in the UK? Have you set up tax residency there? Are you living in the UK for the foreseeable future? Or did you take a short-term work assignment for 6 months and you're intending to return back to California and you consider California your home? So that is really how residency is defined. So again, we get into this topic of being domiciled. What is being domiciled? Domiciled is basically saying that if, I'm from California, and if I had moved abroad for 6 months for a work contract, but I intended to return to California, I'm domiciled in California. I intend to live in California for my whole entire life. That's my home. That's, no matter if I just leave for a few months, if I go on vacation, if I do a short-term stay somewhere, I'm coming back to California. And so I would be considered domiciled in that state. And so, despite my little adventures around the globe, California is still looking to tax my worldwide income, because if you are a full-year tax resident, you're subject to income tax on your worldwide income. And so it's really important that if you want to move abroad and stop filing state taxes, that you are not considered domiciled in the state that you left. And again, that just goes to basically making it very obvious that you moved abroad, you have a new home, you pay taxes in that new home. You can even do additional steps here, such as, in the year you leave, that you file a part-year tax return. And then afterwards, for a few years, maybe you file a non-resident tax return, just to make it very clear to the state you left, you don't reside there anymore. Severing state residency might be something you want to do before you move abroad to ensure that you don't have to file state taxes anymore and you are not subject to state taxes. So how do you do that? The cleanest way is to basically move out of the state to a no income state. So if you are in New York, maybe you go to Florida. If you're in California, maybe you go to Washington, and then you would basically move to a state that has no income tax, and so this is not a problem, right? But I think it's also not that common that someone who's planning a big move across the pond will then move to another state in between. So what's a little bit more practical ways to sever your state residency? So as I mentioned, if you have property in that state, you might want to rent out that property because that's an indication that, you don't live at that property anymore. You don't have to sell it, but you can rent it out, and then, you would still have to file, of course, state taxes if you have rental income from that state, but you then can at least file a non-resident state return. Or of course you can sell the property. That's pretty clean as well. There's things like driver's license. Should you still vote? I would say please don't do too extreme things there. You don't go and cancel your driver's license. Don't stop voting just for the sake of state taxes, because it doesn't really depend on those smaller features. It's just, do you live in that state? Did you make it very clear that you moved abroad? And if you moved abroad, if you moved now to China, right? Did you establish tax residency there? Did you enroll your children to the school there? Do you have a job there? Do you have an indefinite contract there? Do you have housing there? And those are the things that determine that you really broke ties with your current state and you moved abroad. And so in the year that you are moving, as I've probably alluded to, is you're filing a part-year tax return. And this is actually great too, because it helps create that picture in that paper trail that you are leaving that state. You are severing your tax residency there. So when you leave a state, you'll file a part-year tax return, and basically what you say is, I left the state on this date, and then up to that date, so if you left on May 1st, all of your worldwide income, which is probably only for that state because you were living in that state, but all of your worldwide income is taxable in that state. And then after you left the state, so as of May 2nd, only state source income is then taxable by that state. So actually, if you leave and then say you still have rental income, right? But then now you have a salary from a Mexican company. And so you have foreign salary, but you still have rental income. What you would do is, obviously, as I mentioned, when you're still living in that state, you report your worldwide income, your tax on that. But then after you leave, the only income that's still taxable by that state is generally, say, that rental income, because that's still state source. But your foreign salary from this new employer in a different country, if you're not working out of the state, that's generally not state source. So if you're part-year tax resident, up to the part where you were tax resident, you're taxed on your worldwide income, and afterwards you're only taxed on state source income. So you don't have any type of state source income, you only have foreign income. Do you still have to file a state return? Well, again, it depends. If you are a part-year resident or you are considered domiciled and a full-year tax resident, yeah, you definitely still have to file a state tax return and you have to report your foreign income. And if you're a full-year tax resident, you would even be subject to tax on your foreign income. However, for the majority of expats that are no longer residents in those former states, if you were filing a non-resident tax return, or if you had to file a state tax return, that's the filing status you would use. If you only have foreign income, you actually just don't need to file a state return after all, right? You could, of course, file a non-resident state return with your foreign income, and then it just makes it very clear that you live abroad, you sever ties with the state because you're filing non-resident, so you do create that paper trail, but you don't have to do that. So even though states won't tax your foreign income, well, what if you're an expat and you have types of US source income? So you have interest income from your bank that is in that state. Is that taxable by that state as an expat? Generally not. So again, it really depends on the state. There's different rules, of course, per state, because every state likes to be its own state, for lack of better words. But when we're thinking about state source income, generally that is, rental income. You have a property in that state, you're earning income from it. That's US source income, but that's also very specific to that state because it's coming from that state. So that's definitely still taxable by the state. But if you have interest income or dividend income, that's not necessarily a type of income that is still attributed to the state after you leave that state. You can still have a bank account in California, even if you get 1099 in that says that California is the state on it. It doesn't mean it's taxable by California anymore if you no longer live in California. So those type of things you don't have to worry about too much. And of course, if one thing is if you leave and then you come back for a business trip, right? So I think this is very common, especially as a US citizen abroad, because you already have the passport. Your company abroad may say, oh, we need someone to go to the US for 2 weeks. Can you do it? and then you go. Just remember, if you go to the US and you work out of the US and you work out of a state, your daily income earned from that foreign employer, that can then become considered US state source income as well. So, states will generally only tax the income that's deriving from that state, and that is normally rental income and or income if you're actually working out of that state at some point in the year. And what happens if you needed to file a state tax return, but you didn't? Well, just like the IRS, that state will probably come find you, especially states like California and New York. We have plenty of expats that use MyExpatTaxes because they get an unpleasant letter in the mail one day, or maybe their family members do based on their last known address that says, hey, we believe you should be filing a California state tax return. Please do so within the next month. Or, hey, we know you have New York state income. Please file a state tax return. It's usually pretty nice, right? Where they say, please do so, and then they'll get aggressively less nice. So basically, if you do have to file a state or tax return, please do so, because they will reach out if you don't. And of course, if you owe taxes, just like on the federal side, there are interests, there are penalties that accrue if you're not filing and paying in a timely manner. And then I think the question everyone is waiting for is, how does the Foreign Earned Income Exclusion help reduce your state tax liability? I'm sorry, it generally does not. So I know that's not the answer you're looking for, but while you can use the Foreign Earned Income Exclusion on your federal tax return and exclude over $100,000 of foreign earned income from US taxation, remember, states normally are not taxing your foreign income. And so the Foreign Earned Income Exclusion doesn't play a big role. Don't get me wrong, a lot of states do acknowledge the Foreign Earned Income Exclusion. It can make a change in your overall tax calculation. However, there's actually a lot of states that don't even recognize the Foreign Earned Income Exclusion at all. So I definitely would not put my bets on using the Foreign Earned Income Exclusion to make sure that I don't pay any state income taxes. Just remember that if you're an expat, if you don't have state source income, then generally you won't be paying state taxes. And also remember, if you return to the state and you work out of the state for your foreign employer, that can then become state source income. And that you can't use the Foreign Earned Income Exclusion against, because guess what? It was not earned while you were physically abroad. So basically the Foreign Earned Income Exclusion is not the most helpful thing against your state tax liability. So I hope that helped you have a more clear idea of how state taxation works as a US expat. I'm a US expat myself from one of the stickiest states, California, so I get it. And our goal here at MyExpatTaxes is to make life simpler for our fellow expats abroad. So subscribe for more clear and actionable tax tips for US expats around the world.